Sharon Radio, delivering trusted business and financial intelligence.
Excellent day and welcome to Sharon Business Radio, the voice of the economy. We bring you all you need to know about the stock market and the business world right at your doorstep. I am Billy Nwogu. Thanks for joining us. The Nigerian Exchange Limited (NGX) opened the week on a negative note as profit-taking in First Holdco entered when other stocks pushed the market capitalization down by 137.12 billion naira. The NGX All-Share Index declined by 265.99 points, or 0.11%, to close at 239,085.17 points, while the year-to-date return moderated to 53.64% from 53.81% recorded at the end of the previous week. Market sentiment was negative with 32 decliners outnumbering 18 advancers. Red Star Express led gainers, rising 19.86% to close at 16 naira 15 kobo per share. University Press gained 9.38% to close at 5 naira 25 kobo, while UPDC rose 5.97% to 3 naira 55 kobo per share. On the loser side, International Energy Insurance led with a decline of 9.82% to close at 3 naira 49 kobo per share. Nemet International Pharmaceutical fell 9.38% to 7 naira 25 kobo, while Fidelity Bank declined 6% to 18 naira 80 kobo per share. Meanwhile, market activity increased significantly, with total volume traded rising 60.5% to 668.72 million shares, valued at 23.83 billion naira across 45,894 deals. Fortis Global Insurance led trading activity with 205.34 million shares, worth about 412.93 million naira, followed by United Bank for Africa (UBA) with 81.33 million shares, valued at 3.60 billion naira. First Holdco recorded 40.41 million shares, valued at 5.17 billion naira. Looking ahead, United Capital plc said the equities market is expected to remain fairly stable this week despite recent profit-taking following the strong gains recorded earlier in the year. The investment firm said investors are likely to focus on companies with strong earnings, attractive valuation, and good dividend prospects. It, however, noted that continued profit-taking could limit overall market gains and keep trading conscious. United Capital added that stable naira conditions improved investor confidence, and upcoming corporate results could provide further support and influence stock-specific performance. Nigeria's equities market sustained a strong positive run in the first 7 months of 2026, driven by stronger domestic participation, improving macroeconomic conditions, and rising investor confidence. Trading data showed that investors transacted an estimated 10.68 trillion naira worth of stock between January and July 2026, representing a 126.1% year-on-year increase compared with the 4.73 trillion naira recorded during the same period in 2025. Domestic institutional investors accounted for a significant portion of the activity, transacting about 6.71 trillion naira, an increase of 145.2% from the 2.74 trillion naira recorded in the corresponding period of 2025. Retail domestic investors also recorded increased activity, with transactions valued at 3.97 trillion naira, representing a 99.8% rise compared with the 1.99 trillion naira recorded a year earlier. According to the Nigerian Exchange Limited or NGX Domestic and Forex Investors Report, domestic investors have continued to dominate activities on the Nigerian stock market, a development attributed partly to reforms introduced by capital market regulators. Some analysts have also linked the strong performance to the decision by the National Pension Commission, PENCOM, to increase the equity investment limits for pensions funds in February 2026. Under the revised guidelines, the equity allocation limit for RSA Fund 1 was increased from 30 to 35%, while RSA Fund 2 moved from 25 to 33%. RSA Fund 3 increased from 10 to 15%, while RSA Fund 6 active rose from 25 to 33%. The policy has helped to increase the potential flow of pension fund liquidity into the equities market, with some blue chip stocks recording significant price gains. Market capitalization also recorded substantial growth during the period. As of the close of trading on July 31, 2026, the market capitalization of listed companies stood at approximately 158.326 trillion naira, representing an increase of about 58.97 trillion naira or 59.32% from the 99.376 trillion naira recorded at the end of 2025. Airtel Africa PLC and 7 other blue chips companies accounted for about 63.98% or 101.28 trillion naira of the total market capitalization. The gains represent one of the strongest performances recorded by the Nigerian exchange in recent years, with banking, consumer goods, industrial and oil and gas stocks contributing significantly to the rally. Analysts attributed the market growth to improved corporate earnings expectations, attractive yields in the fixed income market, and increased investor positioning ahead of the second half 2026 earnings season. However, despite the strong domestic participation, total transactions involving both domestic and foreign investors stood at 11.98 trillion naira during the 7-month period. This represents a 99.3% increase from the 6.1 trillion naira recorded in the same period of 2025. Foreign investors accounted for approximately 1.29 trillion naira in transactions, representing a marginal 0.9% increase over the 1.28 trillion naira recorded in the corresponding period of 2026. And on global market, U.S. equity futures moved higher early Tuesday as investors looked ahead to key corporate earnings and inflation data due later this week. Futures tied to the Dow Jones Industrial Average rose 0.2%, while S&P 500 futures gained 0.3%. Nasdaq 100 futures also advanced, rising 0.6%. The move followed a mixed session on Wall Street on Monday. The S&P 500 declined 0.28%, while the Nasdaq Composite lost 0.76%, pressured by declines in chip and other technology stocks. The Dow, however, gained 140 points, representing a 0.26% increase. Market attention is now focused on Nvidia, with the chip giant expected to release its quarterly earnings on Wednesday after the closing bell. Investors are also awaiting the July Personal Consumption Expenditure or PCE price index, a key measure of inflation that could provide fresh clues about the Federal Reserve's interest rate outlook. Meanwhile, U.S. Treasury yield moved lower, with the benchmark 10-year Treasury yield falling to about 4.67%. Markets are also watching developments around U.S. government bond purchases and comments expected later in the week from Federal Reserve Chairman Kevin Walsh at the central bank's annual symposium in Jackson Hole, Wyoming. In Asia, Japan's Nikkei 225 closed 0.5% higher, while South Korea's Kospi gained 0.68%. Australia's S&P and ASX 200 also rose 0.68%. Although China's CSI 300 slipped 0.24%, European stocks followed the positive trend, with the stock 600 last seen about 0.3%. Investors will also monitor U.S. consumer confidence data later Tuesday as markets assess the strength of consumer spending and its possible impact on economic growth and future interest rate decisions. And that's all we have for you this evening on Sharon Business Radio. For more updates on business, finance, and economy, follow us on TikTok and subscribe to our YouTube channel at Sharon Radio. I am Billy Unwogu. Thanks for listening. This is Sharon Business Radio, the voice of the economy. Join me tomorrow.